Hello traders, welcome back to one another episode of weekly sectoral analysis. And if you remember in my last episode, I clearly told when market was at this particular level, which is around 25,718, I clearly said that this support has been broken, which is 25,737, 740. And once we close below it and sustain, then the possibly next level to be tested was somewhere here in this zone, 25 530 and possibly below that. But rather than that, rather than market testing this level and bouncing back, it has gone a little bit further down, which is just above 25,300, which is absolutely fine. This is just 50% retracement, nothing much of a worry. But yes, I would also like to say that markets which are extremely strong, which are extremely high momentum rally based uptrends, they will generally retrace just a little bit and they will start moving up ahead. Nifty right now is nothing like that. But is it in danger or something? The answer is no, because we can see a hammer has been formed just at the place of 50% retracement. Also, we have a previous high which is working as as a factor which is adding to the strength of this particular support, which is a good thing. In terms of trend, the trend in the daily time frame chart over here is down because the price is below the dual moving averages, but the displacement of the moving averages, which means that the lower moving average, the smaller moving average is above the faster one. It is a positive sign. It's a good sign basically. RSI is also negative. The momentum is down. If you check in the weekly time frame chart, trend, momentum, both are fine. Even the RSI is looking completely fine over here. The price is also doing pretty good. And next few days are going to be very, very important. I would say that just by looking at this particular hammer, we should not be happy that, okay, now we will, reversing from here or something like that. No, I think next 2-3 days are going to be very, very important in the markets. So keep your eyes open, be vigilant. If some good signs are visible, if you see some, trend momentum developing over here in the next 2 days, 3 days, maybe even 4 days, then things can turn around. There is a possibility, but let's not just call it a bottom as of now before any confirmation. Okay. Bank Nifty. Bank Nifty as a sector in terms of trend, very strong. In terms of momentum, the momentum is also strong. Only thing is you can see that the RSI has gone flat, and that is the reason is because the last 3 weeks we were consolidating. We have also broken this support of 23.6% retracement, and we have corrected little bit. We have just been able to test 38.20% retracement, and we are trying to bounce back. Now, this is a kind of a market, this is a kind of an index which is refusing to retrace even little bit. These type of markets are very strong. Over here, we had a negative divergence also. You can see over here, we had a negative divergence in price. In spite of all this, we have retraced a little bit and we have bounced back. So overall, it's a good sector. And which is the sector which is going to help Bank Nifty? Is it going to be private banks or is it going to be PSU banks? Let's find out. First, today, rather than private banks, I will like to speak about PSU banks, and there is a reason for it. If you look at PSU banks right now, you will find all the things which are required in a very, very strong uptrend. You will see displacement of moving averages, which is fine. You will see extreme high momentum rally, one-way rally. RSI also is in an overbought zone. In the weekly time frame chart also, you will say that price is an uptrend, high momentum rally, RSI in overbought. Fine, it's okay. But the question is, as a trader, are you okay to buy PSU banks at this juncture when we are nearing a weekly time frame Fibonacci extension resistance, and this resistance is at probably 8403, which means 8400 in round figure. and currently we are trading at 83.52. I mean, we are not very far away from that resistance, and considering that there is a lot of space left between the price and the moving average, which means we are slightly overstretched. So are you ready to go long at this juncture? At least I'm not, because there is no risk reward ratio over here. I'm not saying that we are bearish. I'm not saying that even I am bearish. The trend is up, the sector is strong, but as a trader, I would like to, if I'm having any position, I would like to trail it with a stop loss. And if the stop loss is hit, I will exit. But in case if I want to build a new position, मुझे एक नया position create करना है, then मैं चाहूंगा कि ये sector नीचे आ जाए. It takes a dip, and then when it reverses from here, at that point of time, I would like to possibly build a new position. Till that point of time, I would stay away. Okay. If we look at the private banking pack, on the other hand, private banking pack is looking pretty much strong in the weekly time frame chart in terms of momentum and trend. Well, if you see this candle, if you are not aware of this candle, I'll just put some light on this candle. This is actually a high wave candle. A high wave candle is nothing but, it comes up at a juncture when either the trend is down or either the trend is up. It will come at both times, anytime. And it is generally a sign that price is overstretched in a particular direction. Now, if you just check properly, previous to this particular candle, what was the movement? The movement was down. The market ऊपर से नीचे आ रहा था. It was just coming down. We are at a 50% retracement, which means the private banking pack is clearly saying that the trend is up, momentum is up, and the index is slightly overstretched on the downside. We also have a sort of, not exactly, we also have a sort of bullish engulfing pattern here, good sign. But yes, we do need some more buying happening from here, from this zone. Then I think private banking pack is going to be one index which will be important in playing a very, very big role in pulling Nifty on the upside. Private banks are going to play a big role. Then after private banking space, let's have a look at the energy pack. Well, energy pack is in an uptrend. The momentum is fine. Recently, we saw many of the energy pack stocks, flying high. Even the biggest of the stocks like Reliance went up. So overall, the trend is up, momentum is up. We have seen a retracement over here. And if you just plot a Fibonacci retracement, we have retraced till 50% retracement, and this is a decent support, I would say. This is a decent support. We have a lot of candlestick clusters here. So probably a bounce back from here I'm using the word may result in a positive momentum on the upside. Now, just with one hammer, I always say just one candle cannot decide the trend, but so far it's looking positive. Auto pack. Well, now the thing is that as a sector, let's have one look at the monthly time frame chart. In the auto pack, monthly time frame chart is absolutely fine. Trend, momentum, everything is good. In the weekly time frame chart, according to me, what has happened here is we had a consolidation, rally, consolidation, high momentum rally, and now we are consolidating. So the trend is up in the weekly time frame chart. Trend is up, but momentum is not anymore favoring the bulls in the auto pack. Do not misunderstand that I'm saying that auto pack will come down or it will probably laggard or anything. No, it is an outperformer. It is in an uptrend, no doubt about that. Only one caveat, that if you see this level, this is an important level because now 3 times market has bounced back from here. 3 times. In case if auto pack starts trading below this level, sustains below it on closing basis, then maybe a little bit selling can be probable. I'm not saying no, but overall it is a positive sector. But the momentum which we saw here, the fast uptrend which we saw here, we may not see the same in the next coming few days or weeks in the auto pack right now. Okay, so that is what I want to convey about the auto pack. Now going ahead with the consumer durables. Now the consumer durables, it tried very hard in the last few weeks. I mean, I'm talking about 1.5 month back. 1, 2, 3, 3 weeks positive, very good. And then we saw here that it was trying to give a pullback, not successful, and suddenly it has dropped down. So I think the trend is up in the weekly time frame chart. In the consumer durables pack, the momentum is negative. So due to that, in the daily time frame chart, it's a choppy sector, and I would probably like to stay away from this. Consumption pack. Now consumption pack also looks weak due to loosening momentum. If you just convert the weekly time frame chart into a line chart, you will see one thing very easily. We have a higher high in price, lower high in RSI. Now these two things are completely contradicting each other. So this is clearly nothing else but negative divergence, negative classical divergence. Okay, NCD. So this is a sign that things are not going well in the consumption sector. And if you check the daily time frame chart, last week I clearly said that the sector should not close below this particular zone, which it has. Now you will say that, but it has also been able to give a pretty big hammer. I'm not denying that. That's okay. But as a trader, if I want to buy a dip, if I want to buy a pullback, okay, I would like to buy a sector or a stock which has given the minimum amount of pullback. If it pulls back from 23.6%, it's best. If it comes bit lower, it's not that great. If it comes lower 50%, it's even bad. Anything below 50%, if I want to buy, then probably I will think twice. And this sector has actually retraced till 78.6%. So even if it bounces back significantly, probably immediately it will not come in by good books. I will probably like to keep my eyes on other sectors rather than the consumption sector. Finance pack, one of the most powerful looking sectors as of now, including private banking space. So I think there is nothing much to talk about over here, but the trend is strong. Momentum is strong. Volatility is also falling, which is a good sign in the weekly time frame chart. Even the trend is strong in the daily, and the RSI is also strong in the daily time frame chart. Things are improving. So overall, fingers crossed, if everything goes fine, we may be able to see some nice momentum on the upside. Just be careful that in finance pack, the couple of stocks like Bajaj Finance and FinServ have upcoming results. If these stocks start moving, then the finance pack will soon see a good momentum. FMCG. Now, FMCG as a sector, what's happening over here, it's very funny. It's overall, if you see, if you're just gazing at the chart, looking at the chart without any analysis, without any deep analysis, you will say it's range bound. It's going nowhere. I completely agree with you. And if you have a look in the last few weeks, taking out these 2-3 weeks away, then you will see some positivity which was developing in the last few weeks, which was a good sign. But again, what happened here? Shot up and then up, down, and suddenly it came. And why this is happening? Because just two stocks. You just open the stocks like ITC, Hindustan Unilever. These two stocks are the stocks which are having the maximum amount of weightage, if I'm not wrong, in this sector. And both are contradicting each other's movement. So I think it is trying to behave as a strong sector. But as a trader, would I be interested to trade over here? The answer is wrong, because I mean, see, understand one thing. Even if there is some sort of revival, we need to see some confirmation that price is surpassing this band, going higher. We may miss the initial rally, that's okay. But when it gives a pullback, we can, re-enter here with a clear mind or with a clear view and then buy the pullback. But my friend, that's not happening any soon in the last few weeks. So better to stay away from this sector and concentrate on some other one. IT sector. IT sector again. I said something in my last weekly sectoral analysis. Same thing I will repeat. The trend is down in the weekly time frame chart. The momentum seems to be improving in the weekly time frame chart over here. It's improving. This is improving. This is not improving. The trend is not improving. In the daily time frame chart, we gave a pullback, again down, again up, and again down. So again, this low has been broken. Overall, if you just see the daily time frame chart, it's nothing else but chopping around. It's chop, chop, choppy. So why it is choppy? The reason for that is you will see few stocks, 3 to 4 stocks in IT pack which are up in an uptrend. There are 2-3 stocks, heavyweights, which are on the downtrend, and majority of the stocks which are trending on the upside nicely, they're all mid caps. So as a sectoral indice, if you're just talking about the sectoral indices, I'm not talking about stock specific movement. As a sectoral indices, it is very choppy. Is it a sector which can help Nifty to move up ahead? It can, only if all the heavyweights in that sector behave in a certain way when they are going up, not otherwise. It tried to do that in the last 2, 3, 4 weeks, but again in the last couple of weeks, it has tried to retrace a bit more. Metal pack, one of the strongest sectors as of now. Trend up, momentum up, no doubt. Trend up, momentum also up. By the way, we can also see a higher high in price and a higher low in price, higher low HL in price. And in RSI, we can see a lower low, which is a hidden divergence. If you don't know about hidden divergences, you can, in RSI, hidden divergence, if you don't know, you can just go onto my channel, and there is one video where I've shared about all the important information about divergences in RSI. I will try to add that video at the end of this video. Okay, so you can have a look at it. So basically, it's a good sector. It's a positive sector, and the good part is that it has not, so far, it has not been able to retrace much. If I just plot this Fibonacci, it has just pulled back by 38%. So it's a strong sector. Okay. Infra as of now looks strong. Trend up, no doubt. Momentum up. Stronger sector. Yes, it has gone through a gap down, but more than that, nothing bad over here. Also, the retracement seems to be pretty shallow. So far, it is good. Let's hope that if it wants to recover, it should start recovering from here itself. Should not go much down. That will be a good sign. Going ahead with Pharma pack. Well, now the Pharma pack, it has been trying a lot, I should say, just like the metal pack. There are few stocks which are performing, few are not. So we saw an up move, slight up move a bit more, and then it has retraced. In this retracement, what we can see is it has not been able to break this low. In IT and other sectors, what you saw was, I'll just go back to the IT pack for a second. It went up further and then it broke the low. But in the Pharma pack, it's not happening. If you see, it's staying at one moment, which is a good sign. So there are hopes in this sector. There are certain hopes that the large caps in Pharma pack, if they try to move up from here, then the sector could see some sort of improvement. But largely, if you just see it without an analysis, just with a naked eye, दूर से ऐसे अगर आप देखोगे तो you will obviously see it's chopping around. So there are some good signs about the Pharma pack, but it should not just remain into a sign. They should change into a good, beautiful uptrend. Only then it will be a good sector to make money on the long side. PSE sector which is positive. Trend, momentum, both are positive over here. Things are looking absolutely fine. Only thing is we need some, along with momentum, we also need some fast velocity move on the upside, which is yet not happening. So I think that is something which we'll have to wait for. Realty pack. Realty pack, if you have a look, at the weekly and the daily time frame charts, they will contradict each other. Okay, so why they will contradict each other? The reason for that is, first thing is, in the weekly time frame chart, you will see and understand that, okay, we had a spinning top, then we have a negative candle, and again a negative candle over here. Let's break this down and try to understand what's happening first in the weekly time frame chart. सबसे पहले, first of all, if you see the displacement of the moving averages in the weekly time frame chart is turning positive. See this, it's turning positive. The green one is above the blue one, which is a good sign. RSI is also positive. Then talking about the candles, is this a spinning top? This one? Yes. This is an inverted hammer. So the second candle was a negative candle. The next candle is basically nothing else but a high wave candle. It's a high wave candle. And why it is such a big candle? Because the reason is we had some sort of selling happening in the last 3-4 days. All the candles were big and there was a big green candle over here also. Fine, it's okay. So in the next coming week, if we see some drop in volatility, if we see some choppiness little bit here and there, it is fine. Also, you check this hammer has come up at a place which is a previous high in the daily time frame chart, and it is also 38.20% Fibonacci retracement. So if we start seeing contraction over here, or smaller candles, and then we see bounce back on the upside, it will be good for the sector. It will be positive for the sector. India defense. India defense, I think I would say that it was a very good sector. It was a promising sector, went up, consolidated. It also retraced a little bit. And I had some hopes from the sector that it may perform, but unfortunately in the last few days, it has dropped down and it has made a lower low. So in terms of trend, in the weekly time frame chart, it stays positive, but the momentum has gone negative. So I think it's a neutral sector, neither positive, neither negative. I mean, in such sectors, if you want to trade, you will have to go completely stock specific. Like if I want to trade in private banks, I would like to go long more rather than going short if I have a chance, something like that. But if I want to trade in India defense, then I would probably have to take a lot of stock specific view rather than taking a top down approach, like first index kya dikhta hai and then I will go to the stocks. That's not going to work here. Midcaps, I think in terms of trend, absolutely fine. Momentum also absolutely fine. Just a little bit, I would say over here that the volatility in the last few days has increased in terms of the daily time frame chart. The retracement is also pretty shallow, not much deep. So again, if we see some consolidation and the bounce back, the trend should resume pretty comfortably in the mid-cap space. Okay. So I think summing it up all, I would say by looking at Nifty and other sectors, previously when the markets were moving higher or when they were consolidating, we had sectors like auto, auto, metal and PSU. These were the two sectors which were the leading ones. Okay. Auto, and then we had this metal, and then we had auto, metal and PSU. What happens generally in a bull market is basically sectors keep churning. Like one sector performs, it gets tired, it comes down. Then the other one which is sleeping, that starts going up. So what I'm seeing in this video by analyzing today with all of you is that, see, auto as a sector, as of now, so far it is bullish. Only thing is it needs to see that it doesn't break this recent low. Momentum wise, it's getting weaker. So instead of auto, like metal is positive, pharma is trying, but it's not still there. Realty is also trying to become positive. And private banking space and finance, these are the two sectors as of now, especially the private banking space, because it has the weightage. It has the weightage to lift Nifty higher. So the sectors which were performing are little bit getting tired. PSU banking space, again, I forgot to add one more point. The uptrend which we saw in the Bank Nifty was also due to the rally in the ongoing PSU banks. So when it will happen, I don't know. But whenever I think PSU banking space gets tired, private banks will start picking up. So I think it's a sector rotation which is happening, and it's important to understand which will be an outperformer and which will remain as an underperformer. Okay, in a bull market, you just cannot go long on any Tom, Dick and Harry stock. Okay. So I hope these videos are helpful, proving helpful to understand how markets will move in the next 1 week. Trade wisely and trade smartly. Thank you.